In this example video, we're going to look at brief exercise 717, looking at how many units we would have to sell in order to earn a target income. Our focus for a lot of this up until the point was looking at how many units we'd have to sell or how much sales revenue we'd have to earn in order to break even. But every company doesn't just want to break even, they want to start making a profit. So this gives a company an idea of how much they would have to sell in order to achieve that desired operating income. So they tell us that Head First Company plans to sell 5,000 bicycle helmets at $75 each. The unit variable cost is $45, and our total fixed overhead and our fixed selling administrative expense combined equals $49,500. So they want us to calculate the number of helmets that they must sell in order to earn an operating income of $81,900. So we're basically going to take our break-even point in units calculation, our formula, and just simply tweak it very slightly. So when we were doing our break-even point, we said that we wanted our contribution margin to only cover our total fixed cost, because that would get us to a zero operating income, which would mean that we would break even. When we're looking to figure out how many units we'd have to sell in order to hit a target income, that means we want our contribution margin to work a little bit harder for us. We want that contribution margin to not only cover our total fixed costs, but also have enough left over to provide us, in this case, with that $81,900 in operating income. So how we slightly change our formula here is that instead of just having our numerator be our total fixed cost, we're going to add to that our total operating income. So your numerator is always going to be whatever you want your contribution margin to be able to cover. And again, your contribution margin per unit is your denominator because you're looking for how many units you have to have in order to break even. So for us, we would take the $49,500 plus the $81,900 in operating income that we want to have, and we would divide it by our contribution margin per unit. So contribution per unit is your selling price per unit minus your variable cost per unit. So our $49,500 plus the $81,900 divided by our $30 per unit contribution margin means that we would have to sell 4,380 helmets in order to reach that target. They told us in the problem that the company plans to sell 5,000 bicycle helmets. So this gives a company an idea of whether or not that $81,900 operating income is actually a realistic target. It's 4,380. We plan to sell 5,000. Although we plan to sell 5,000, it doesn't mean that we're exactly going to sell 5,000. We might sell 4,900. We might sell 5,100. But now it's showing us that that 81,900 is really something that's achievable. If we did this formula out and it said we'd have to sell 9,000 helmets in order to reach that goal, and we only plan to sell 5,000 this period, we would know that that 81,900 is a little bit out of reach for us during this period of time, and that would help us with our budgeting. So they want us to put together a contribution margin income statement based on the number that we just calculated. So $75 is how much we sell each helmet for, and we said that we'd have to sell 4,380 of them to reach that target income. Variable cost, they said, is $45 per unit. So we would subtract the two to get our contribution margin. We know our total fixed cost is $49,500. And when we subtract the two, we're left with that operating income, which is what we desired it to be, and it matches. So it's just a way of double checking that we did our calculation correctly. We could do the same thing, the same process, to figure out how much in sales revenue that we would have to sell in order to meet that operating income that we have. Again, it would just be slightly adjusting that break-even point in sales dollars formula. So in our numerator, it would be our total fixed cost again, plus our total operating income, divided by the contribution margin ratio to get us the sales dollars that we would need to reach a certain target income.